Cast your minds back to the start of the month. We were feeling confident that we'd seen perhaps the worst of the interest rate rises following, well, a long period of 0.5% rises. The move by the RBA to lift by 25 basis points was a signal many were hoping for to feel more optimistic about the gathering storm clouds upon the economy. But in the last couple of weeks, that era of hope has been, I reckon, wiped away fairly quickly. Firstly, the US received its monthly set of inflation figures, continuing to climb up to 8.2%, and its central bank, the Federal Reserve, will make a move on interest rates this week. More on that in a moment. Last week, we had our local inflation numbers escaping out of the shadow of the budget, which, to remind you, had been all about the balance between the cost of living relief and, quote, slaying the inflation dragon, unquote. That came in at 7.3%, well above the expectations of most economists. Now, moving to today, where we learned Australians can't kick the habit of spending. Record amounts of money spent in shops, supermarkets and cafes, I have to say, in September. Retail trade lift of 0.6%, the 9th consecutive month of increases, and now everything points to the RBA resuming, well, potentially a bigger rate hike tomorrow. So not good news for mortgage holders, but in the face of mounting global conditions about what's needed, the question still remains, does it? Will the world plunge into recession? One man who thinks there's a high chance of that happening, at least in the US, is Konark Saxena, the Associate Professor at the University School of Banking and Finance, who I'm delighted to tell you is on the line. Konark, thank you for your time.
Thank you for having me.
Not at all. You've got a pretty bleak outlook, haven't you, for the US? How likely is recession there, and what's pushing your thinking about them in that direction?
I agree the outlook is bleak, but I try to be a bit scientific about things. I think what's happening right now is, as we all know, there's a lot of inflation momentum. It keeps going. Labor markets are doing well, and all these things are typically good things. But what that means for the Fed is they have to increase interest rates to sort of calm these prices down. They don't want prices to go too high, inflation to be more than 10%, which it was in the 1970s. So they're going to increase interest rates aggressively, having learned some of those lessons. And I think the best case scenario is they manage to increase interest rates just enough so that inflation calms down, but the economy does not go into a recession. But that case seems very unlikely. And I think I had a relatively conservative estimate. Even U.S. economists are giving a higher number at times. And even President Biden said it's likely to be a mild recession next year. And so I put it at 75% probability. I can talk about the math, but that's not as interesting.
So we used to say forever, it seems, if the US has a sniffle, Australia catches a cold. Given the fact that a lot of people hold the view that a recession's unlikely in Australia, what impact would a recession in America have on us in the near term?
So, well, there are a couple of things. So, depends on what type of a recession it has actually, and sort of I spoke about this in the article. So, I expect what's called a mild recession, like President Biden, which means that their growth is going to slow down, but that doesn't mean they're going to pull down inflation rates as much because they stop hiking before they're able to get inflation to a lower number. So that means higher interest rates and higher inflation for the U.S., but without the bad unemployment outcome. So that's why we're calling it a mild recession. The unemployment is not expected to go too high, even though growth slows down.
Yeah.
Now, for Australia, in this scenario, Australia will have an impact of the higher interest rates in the U.S. either imply higher interest rates in Australia. So we have to either match them or we let the currency depreciate because there's a no arbitrage relationship between our interest rates and currencies that sort of dictates that sort of an outcome. So I expect Australia to also increase interest rates substantially by the mid of next year. And so that would mean our housing market will slow down. House prices would decline, and real estate related sectors would have an impact.
How high do you think interest rates have to go here?
I think I like to think of it in terms of real interest rates. So if inflation comes down to, let's say, 4%, then the nominal interest rate should be about 5 or 6%. So there's a lot of room for either inflation to come down. If it comes down to really low levels that we've seen historically, that's great. We don't have to increase the interest rate as much. But in this scenario where there's a mild recession in the U.S., inflation remains high, and that means the nominal interest rate has to go high to, I would say, about 6%.
Right. Tell me about the impact the U.S. economy has when the RBA sits around tomorrow to come up with their decision. Do they take into account what's happening overseas, and to what extent do they do that?
So I think they should. I don't know the inside workings of the RBA, but I think they should as a part of their mandate. I think if they want to, and they should want to sort of avoid any financial distress in Australia. They don't want households who have large mortgages to go into financial distress. They would like to keep interest rates down. But what happens in the global economy will impact their ability to do that. And so given what we're seeing in the U.S. right now with high inflation, they are likely to be a bit more aggressive on increasing interest rates. So they might have the 50 basis point this time around. And the retail figures sort of point to households doing okay on the consumption. The side of worry is house prices declining by 10% over the last several months. And so that and how much that's causing financial distress, I think will be one of the key variables for them to decide how much they're going to increase the interest rates.
Yeah, gotcha. Kanak Saxena, Associate Professor at the University School of Banking, University of New South Wales, I should say, School of Banking and Finance. Thank you for joining me on Money News. Good to chat.
Thanks. It was a pleasure.